Financial Survival Network. Survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
The show is brought to you by Miles Franklin. When it comes to protecting your wealth, you know there's nothing better than gold and silver. And when I want gold and silver, I go to Miles Franklin because they've been around 22 years, and when you buy, they ship. For more information, go to milesfranklin.com or call them at 800-822-8080 and get a free quote. 1490 WGCH. This is Carrie Lutz, and you're listening to the Financial Survival Network.
Back with me for our weekly foray into the unreality of central bankers and their policies is Ranting Andy. And if you want to know why gold is up $22.80 today, then you really want to hear what Andy has to say. Andy, hello. How are you?
I'm great. I just got back from the Investment U conference all last week, and I'm ready to go.
Oh, I heard about that. What was that like?
It was pretty good. There was, Eric Sprott was there, and Rick Rule, and a bunch of pretty smart people, and we were there for 5 days talking about our stuff.
What's your take on today's increase in gold and silver? I mean, we're seeing gold up nearly $23. Silver is making a nice little run, half a buck. What's going on there?
Well, the press will write that it has to do with Bernank speaking today and doing his usual, pro-gold commentary. But the fact is, nothing really happened today. Here, let me go over what happened on the leap day violation. This was just 2 or 3 weeks ago. I'm going to tell you, this is the words that came out of Ben Bernanke's mouth that were considered gold bearish. He simply said, the decline in the unemployment rate over the past year has been somewhat more rapid than might have been expected. Okay? That's in the context of about 10 minutes of comments, all saying that we continue to be extremely accommodative with monetary policy. That one statement came out, they put 375 million paper ounces on the market. And by the end of the day, the press was writing Bernanke was going to get rid of QE, which was complete garbage. He said nothing of the sort, nothing even close. Now, they got gold down from, it was sitting right at its 200-day moving average at the time, which is about 1670, 1680. There's this massive 6-month reverse head and shoulders formation that's almost completed, and they were very scared. So it was also the same day of the $500 billion LTRO financing, and gold and silver were breaking out. So they were scared of what was going to happen. They came out with this garbage attack with paper money. And when they got gold down to barely below the 200-day moving average, they realized that they couldn't get it down anymore. So we've seen in the last 3 weeks massive covering of shorts. And sure enough, when Bernanke comes out today and simply says, further significant improvements in the employment rate will require a more rapid expansion of production, which can be supported by continued accommodative policies. So he really said nothing today as well, but gold goes back up, and that's what the press writes. The fact is, they did all they could to break the 200-day moving average. They did all they could to break the reverse head and shoulders formation. They failed in both cases in gold and silver, and that's where we stand today.
So you think that the increase in prices is going to resume in the not too distant future, huh?
It should never have stopped. And again, I say it all the time about short-term charts in gold and silver. They are meaningless. They are beyond meaningless. The cartel looks at these things and tries to paint the tape by breaking down formations such as the 200-day moving average or these reverse head and shoulders. The problem is when you continue to cap into a bull market, all you do is create massive resistance levels that once they are broken become even more massive support levels. They did this for a year and a half with $20 silver, which will never be seen again. And, I've been saying for the last 6 months or 3 months or whatever, that they did the same thing with $30, and we're not going to see that again either.
Probably not. And it's looking more and more obvious that this job just ain't going to work. And it's just putting Band-Aids on. And one other thing I wanted to go talk about was you mentioned that Apple is like the plunge protection stock. And I sent you a chart today that I'm going to put up on the site showing what the S&P 500 advance would look like, what it looks like with Apple, and what it looks like without Apple. Did that surprise you at all?
No, I've been calling it the surrogate PPT for a couple of weeks now, because it's now, I think it's close to 15% of the NASDAQ. And remember, there's so many of these HFT computer programs that are tied to things like Apple's movement, and that it creates its own feeding frenzy. There is no way that there's material retail money going into a $600 stock. It is simply computers that are pushing it higher. When the cartel doesn't get much help in that department, but this is one of the areas they do. And I would completely and utterly ignore the NASDAQ in every way, shape, or form. It is an even more artificial index than the Dow propaganda average.
The Dow propaganda average, huh? So it's computers like computer stocks. Is that it?
well, look, in fact, you'll see my piece today. It's called Going Bats, because it's referring to what happened to the stock Bats on Friday for most people who didn't see it.
Tell us about Bats, what it is and what happened.
Right. In fact, I'll tell you about the three things that happened on Friday. Bats was a IPO. It went public on Friday. It's called Bats Global. I have no idea what it does. For $16 a share. The range was 16 to 18. They sold 6 million shares at 16. There was nothing untoward about the IPO. It opened up at $16, and an hour later was 3 cents, and they canceled the IPO. And that's what happens when computers take over trading. The second thing that happened and is ongoing as we speak, pull up your screen, TVIX, the Velocity Shares Double Short VIX ETF, which is supposed to go double short the ETF movement, the VIX movement, and instead has fallen 50%, I think 60% in the last 3 days, and no one could figure out why. This is what happens when leveraged ETFs take over the market. They have destroyed the market. This is all HFT programs. They even had to halt Apple on Friday because of rogue HFT trades that took the stock down 10% in a few minutes. This is why people are out of the stock market. This is why I advise anyone and everyone to avoid all paper investments of every kind.
Yeah, so it's the hard assets, huh? It's the specialty of Miles Franklin that you think is the final refuge for the few sane people out there.
You can create as much as you want of any paper security, whether it's a double short ETF, whether it's the Treasury bond ETF, whether it's a mining share, whether it's a currency or a paper commodity market. No matter what, you are going to see unlimited naked shorting. Naked shorting has been completely and utterly condoned in the last few years. And now that these HFTs are 75% of all trading, there is absolutely no reason to take risks. And there's so many other risks in paper securities, like dividend and capital gains risk increases, which are, of course, going to happen in the social states of America. There's nationalization risks if you're in mining. There's brokerage risk. There's MF Global. There was a Japanese company called AIJ Tokyo, which I just found out last month, did the same thing as MF Global, except on twice the scale. You are just going to get your head cut off in the paper markets.
Hey, and do you think, this is a total aside because I did a triple Lutz report on it over the weekend, you think justice is coming to the scammers at MF Global, or do you think the noise coming out right now is just more of the same and it'll quickly be forgotten?
I think the case will quickly be forgotten. I think it already has. That said, Mr. Corzine himself, in fact, I was debating this and I had to do it. I had so many things to write about today, and I actually put him up front because Friday afternoon an email surfaced from one of his treasurers in the accounting department, specifying directions for him to telling her to take $200 million out of a client account and put it in JP Morgan's account 3 days before it collapsed. So I would not be surprised if Corzine actually has to go to jail over this. But as far as the case and people's funds, it'll be forgotten. And if you had your money there, that's too bad.
Yeah, it's an interesting thing about that because you and I have both worked with big corporations and we know the mindset there. And the way I interpreted it is this gal, Anita OBrien. She's an assistant treasurer. There are probably more assistant treasurers in a big company, because somebody's got to sign the checks, basically. And the CFO just happened to be on vacation that week. So the order goes down to her, and she says, I see this one coming. So she sends out this email saying, I'm doing this because JC, John Corzine, told me to do it. And this is to be discovered by the investigators later on, so that when they try to scapegoat the underlings, they'll be, nope, here's the proof. We did it. He told us to do it. And this guy Duffy, who is the CEO of the CME, already said that his employees told him that Corzine ordered it. Plus, J.P. Morgan or J.P. Chase knew this was going on, because they sent a letter they wanted O'Brien to sign saying specifically that these weren't client funds, and she refused to sign it. The letter never got sent to JP, and then the thing collapsed like the house of cards that it always was. So this is a CYA by a low-level employee who knows what's going on and that they're going to come after her, and it was pretty clever when you get down to it,
Yeah, and then, unfortunately, it's a small measure of success for all the people that lost money, because it's like Bernie Madoff. Yeah, he went to jail, but people lost billions of dollars, and Corzine may or may not go to jail, but I can assure you that anything that happens with him will stop right there. You will never ever see J.P. Morgan or any get reprimanded, or any clients get their money back.
Yeah, I just don't see how that's going to ever happen, because it's the people that own the system and run it, just the same way that these CDOs, these CDSs, the credit default swaps are never going to be paid. There's a great YouTube over the weekend of a guy who is what they call what kind of trader do they call them? I can't remember. There's a name for guys that buy bonds and then buy the CDSs to protect them. I think they call them rate traders or something. And he said, I bought these things, billions of them. They're never going to get paid. It's obvious now. The whole thing's a scam. They have zero value. They have as little value as the mortgage-backed securities that were sold to all these pension funds and insurance companies all over the world. Another security, a hodgepodge alchemy creation of Wall Street that turns out to have no value whatsoever and no protection. It just amazes me. I don't know why. How can I be amazed at this point, Andy?
I am surprised that you're amazed, but the fact is, even being amazed, you can be more amazed. And if there's one thing that people should take away from what I say, it's that you will lose with any paper security. I don't care if you're long, you're short. I don't care if it's a resource stock, a bank stock, an ETF. You will lose in any paper security. They can control the system. They can make unlimited amounts of buy orders and sell orders. They are not regulated. They are completely in control of your life. The only way that you can beat them is by buying the things that they cannot create supply of, and that would be physical gold and silver. There are certain other commodities, like food, but I'm talking more about, for preservation rather than investment. But anytime you go in those paper markets, you are going to lose. That's the game.
I wholeheartedly agree with you. I mean, I'm in it to some extent. I've got my core metal holding. It just is, there's a limit to how much I want to have there. I've got what I need, but the paper markets they're just fixed. And I wanted to talk about one thing with you, but we're going to cover it next week, and that is burgeoning gun sales across the country. I want to talk about it not from the standpoint of they're getting ready for the revolution, but what it really means and the message that it really sends out there that people really need to be paying attention to, because your life, your wealth, what you do for the next 5 to 10 years, how you live and how your family will be living depends on what you do right now. You agree with that?
I couldn't agree more, and be happy to talk about it next week.
All right, Ann, always a pleasure. Hey, we'll keep up with you at milesfranklin.com, and thanks for being a sponsor of the show. We'll talk to you again soon.
Thanks, Kerry.